Here to weigh in on the Fed's next move, Dennis Lockhart, former Atlanta Fed president. Mr. Lockhart, welcome. Good to have you with us, sir.
Thank you, Tyler. Good to be with you.
You know, we're always interested in what the Fed does. I think you sort of are in the camp that thinks they'll probably raise a quarter point, but that a half point is not completely off the table. But what really interests me here are the kinds of calibration or recalibration words that the Fed might use on Wednesday in its statement or in its press conference. What will you be listening for as a telltale of what may come next?
Well, I think you have to listen for the elements in the data picture that really are going to dictate where they stop. And that would be first, the confidence they have that the inflation data are actually showing the kind of decline in inflation that they hope for and they need, and that it is beginning to convince them that inflation is headed in the right direction. That's just one example. Demand data as well, I think, are important to the overall picture. They have been trying to slow the economy. So it would be some emphasis on the data that they're going to look at most carefully to make their decision when they finally determine a stopping point.
Interesting. What they say about what inflation is doing and how enduring that change in inflation's direction may be, and demand data. Those are the kinds of things you'll be listening for most acutely. Yes. As a signal
indeed.
To what they may do next. And do you think, whether they stop at 4.5 to 4 3/4, or whether they get into the 4 3/4, 5 1/4 at the stopping point, do you believe that they'll stay at that stopping point for an extended period?
I do. I think that what they're going to try to calibrate as they go through the next 2 or 3 meetings is a stopping point that they think will be durable, that will hold up for a hold period. And all signals are that, as of now, at least, they're thinking the hold period will last for most of the year, if not to year end. So they definitely, I think, want to set that rate where they're going to hold, and then let it produce the lag effects that bring inflation much closer to target, without necessarily going into a recession or doing much damage. It's not an exacting thing, but I think that's what they're going to be trying to do.
And as you probably know, and it's great to have you here, Mr. Lockhart, but as you probably know, the market is betting on a very different outcome, one where they might have to cut. There's a small chance they might have to make big cuts, for instance, if things really turn sour. Do you think there needs to be a wider range of views at the Fed? This is something Steve Liesman keeps highlighting, but last year when they were wrong to the downside, thought they were only going to 1%, basically everybody held the same view. This year when they insist they're going up to 5% and holding, or whatever the number is, basically everybody has the same view. Don't they need to have a wider range of dispersion here to indicate there's more intellectual flexibility if things don't play out as they expect?
Well, a wide range of views is desirable. It really is. I have to say, from my own experience over 10 years, there is a bit of a tendency to groupthink as you get closer and closer to the meeting. At the same time, they want to present a united front in the sense that the committee is together. There's not a lot of let's just say, real difference of opinion on the committee. That would be something that would undermine confidence, and I don't think they want to show that. So what goes on in the room and what the views that are expressed there may not be known much until the minutes come out in 3 weeks, and they may show that there are a variety of views. But coming out of Wednesday, I think they're going to show very much a single position, a single point of view.
Without divulging some of the secrets of the temple, I'm curious. There's a jobs number that's going to come out on Friday with average hourly earnings and those kinds of numbers. Is the Fed privy to those numbers ahead of time?
My experience, no. The chair, I believe, gets some numbers, and it may be the jobs numbers the night before they are announced, but the chair does not share that information with at least the presidents, and may not share it with the governors. So the Fed, for the most part, is getting the data at exactly the same time as the markets are getting the data.